Today, we are going to talk about MACD. What is it and how to trade using the MACD indicator. What is MACD? MACD is an acronym for Moving Average Convergence Divergence. It utilizes moving average to determine the momentum of the security. It sounds complex. It sounds more difficult than differentiation or integration in high school or secondary school. But actually it is not. So let's take a look at the MACD graph over here and let's unpack it. First and foremost, the blue line, it represents the MACD line. The orange line represents the signal line. And of course, the red bars and the green bars represents the momentum indicators. So the darker the colors, the stronger the momentum. So now you know the basics of it. Let's go on to more interesting stuff. So first of all, what happens when the MACD line crosses the signal line? It means positive signal. MACD line crosses the signal line. You guys can pause the video and practice at which point the MACD line crosses the signal line. Okay. These are the points when the MACD line crosses the signal line. It indicates a positive signal and it usually accompanied with green candle bars. Green bars, green bars. It crosses, cross, accompanied with green bars. Now, what happens when it is a reverse? Signal line crosses the MACD line, meaning negative signal. So pause the video and practice at which point the signal line crosses the MACD line. These are the points where the signal line crosses the MACD line and it again usually accompanied with red candle bars right now because it's opposite, remember? Opposite, red candle bars, after this, red bars. So you see the orange line crosses the MACD line causing a downward trend and vice versa. When this MACD line crosses, it causing a positive trend. So downward trend, downward trend, downward trend. To simplify it, whenever it is above 0, it is considered as is still a positive momentum. When it is below 0, which is the pink line, it is considered as negative momentum. So now let's take a look at some of the real examples so that we can really understand what is going on. If you guys not 100% sure what is going on, you guys can just rewind the video, rewatch the video to get the basics right. Right now we are at Tesla's chart and the one below is the MACD graph. So as you can see, the MACD graph, it fluctuates up and down following the chart pattern. So as you can see over here, first and foremost, there is this MACD line crosses the signal line at this point. What happened next to the price? What happened to the price? The price shoot up. The price went up. And then when the signal line crosses the MACD line, what happened? The price dropped. So as you can see over here, it tells you, the MACD line tells you what might happen to the price action. And it kind of consolidates over here. But then the MACD line crosses. And of course, accompanied with massive, intense green candle bars, causing the price to spike up. And of course, people usually sell at this area, but usually you just gotta wait and see for, whether it goes down even further. And in this case, it kind of consolidate and it spike up again to $900. And when that happens, there was this downward trend. And if you are a disciplined trader, disciplined investor, you would cash out at this point of time when it crosses, and then you just wait for a better entry level. Of course, sometimes the price might even go up to $1,000 for Tesla and then even higher. But if you look at the MACD and you are disciplined traders, you look at it, you know that, okay, the price might reverse back down. So right now it consolidated quite a few days, right, before the price really went down. After the MACD crosses, so it crosses, the price slowly drop down to $550. And what happened next? You take a look at the MACD over here. It crosses at this line, the price spike up. But then it was a false spike. And then now we are at consolidating phase for Tesla. So next, let's take a look at Apple shares. So for Apple, very evidently over here, when the signal line crosses the MACD line, the price had a dramatic drop down in price. Okay, and then it consolidate. So the latest spike happened when the MACD line crosses the signal line, indicating a bullish indicator, bullish momentum going upward. So, but then again, the price has been going up. So what's going to happen next? Because the the MACD doesn't seem to cross. So is it a good time to enter? How do we know when to exit, when to enter? So the MACD shows you, what might happen, what's going to happen to the chart. But then you need other form of indicators to help you as well. So why do we need other indicators to complement? So first of all, there are limitations to the MACD graph. So the MACD indicators, it has limitations. That's why traders use multiple indicators to help them to day trade or invest. So the first and foremost, which is laggy indicator, it lags. So for example, over here, when the price drops substantially, then when that happens, then the MACD start to cross. So if you are in profit, you could have cash out in this area, but you didn't, and then the price dropped at this point, it start to cross, then you start to cash out. You lost this amount of profit. Next, on the opposite spectrum, which is early indicator, when the price start to spike up, but it is a false spike, and then it drop back down. So as you can see over here, it crosses, but it's not convincing cross. So therefore, the MACD is either too laggy or too early. So that is the limitation of it. So therefore, usually I'll complement it with RSI, SMA, or EMA, or I take a look at the support line or the resistance line. Alright guys, I hope you guys found the video useful, and especially I hope you guys enjoyed the PowerPoint slide and the entire presentation. If you guys do smash the like button for the YouTube algorithm and subscribe. If not, I'll see you guys in the next video.